Yes, people, a very, very happy afternoon, all of you. Once again, loud energy. Thank you so much, people. So, guys, we are doing this topic called as dissolution of partnership firm. And under the insolvency topic, this is the last concept that we're going to discuss, which is highest relative capital method. So, guys, under insolvency, I told you there are two concepts. One is one-shot payment of to the partners, one-shot payment to the partners. Under this method, the belief is that all the assets are realized on the same day, and we make the payment to the external liability holders in one shot, and whatever money is left over, we make one-shot payment to the partners. But in real life, it doesn't happen. This will be realized in different dates. Money will be paid to different people on different dates, and even to the partners they may insist to make the payment as and when the money received. They can't wait forever because this entire dissolution process may take sometimes even a year of time to finish. In that case, the partners cannot wait until the entire money is received. So if the question says that the entire money is being paid in one shot, the partners are okay to wait till the end of the process and then take the money in one shot up to now. What we studied is correct. Under that, we had insolvency of our partner concept and insolvency of all partner concept. We've done multiple revisions for this, so I'm not touching this once again. Then we discussed the concept of piecemeal payment to the partners. In this concept, we understood that the assets will realize money on different dates. You'll make the payment to the liability holders on different date, and even to the partners, you make the payment on different date. And you make the payment as and when the money is being received. So once you make the payment to all the external liability holders, the remaining money will go to partners as and when money is received. That is called as piecemeal payment, piecemeal distribution. However, the money comes, in what form the money comes, on that basis, we'll keep on distributing it then and there. So realization of the amount has been distributed in pieces. That is what is called as piecemeal distribution. In that, we have two methods. One is maximum loss method. Second is highest relative capital method. Two classes we spent on maximum loss method. And today we'll be done with this concept, which is highest relative capital method. So before I read the theory, what I feel is I'll do one question with you. Once you understand the concept, then we'll come back and read the theory so that it makes more sense in understanding. Okay, not okay? Okay. In that case, I'll take question number 8, people. Question number 8. The way you solve the concept is same ditto like your maximum loss method. Working note alone will change. The main answer is there, the main presentation. Payment ka format, column format, all that is ditto same. The only difference lies in the working note. The working note for maximum loss, what we did, no? 2 working notes. Instead of that, the working note here is going to be slightly different. Okay, not okay? No. The question says that a partnership firm was dissolved on 30 June 2022. Its balance sheet on the date of dissolution was as follows. So capital is given ABC, loan by partner B, and sundry creditors is given. Sundry creditors what? External liability, external person. Loan by B is how much? Loan by B is called as what? External liability and internal person. Whereas capital is called as internal liability, internal person. Very good. So first payment here, second payment here, third payment here. Okay, not okay. But even before you make the payment to creditor, what are you supposed to do? Dissolution expenses needs to be accounted for. Cash 10,800, sundry assets 1,89,200. The assets were realized in installments and the payment were made on the proportionate capital basis. Proportionate capital basis. Now, another name for highest relative capital method is, this method is also called as proportionate capital method. Take a highlighter, highlight this point, or put a slash and write. This is called as proportionate capital method. Both means the same. Look at the beauty here. The main heading is highest relative capital method. But what is the language used in the question? Proportionate capital method. So be very careful. This is the game that they'll play. Now, creditors were paid 29,000 in full settlement. Oh. How much am I supposed to make the payment to creditor? 30,000. In full settlement, that is in full and final settlement, what is the amount that I'm paying? 29,000. What is the amount that I'm not paying? 1,000. That is my realization gain. So when you prepare the realization account, this 1,000 gain will automatically take care in the balance. But are we going to prepare the realization account? We will prepare normally, but whenever we do piecemeal distribution, we don't prepare this account because the focus is on the working note. The focus is on the working note. So we will not prepare any realization account or capital account. But if at all you're preparing, in that this gain will be taken care of. Okay, not okay. Now, since you're not preparing relation account in the working note, then this gain has to be separately be taken care in the working note. How to take care of that, I'll tell you when I do the answer. But I'm putting one star mark here. I'm putting one star mark here because when I do the working note, when I prepare the creditors in the column, at that point of time, I have to do one adjustment here. So for that reason, I'm putting one star mark. Any problem here? Any difficulty to understand so far? Online people. Any difficulty? Anjana, Lakshana,
No,
Darshini,
sir. No, sir.
No, sir.
Pranashri,
No,
Hemasurya,
sir.
Kamlesh, Lokesh, Mushina,
No,
Niyasha,
sir.
Raghavi, Reshmi, Ritika, Sanjay, Sarvesh, Srinanda, Sushmita.
No, sir.
No, sir.
Chalo. Great. Expenses of realization were estimated to be 5,400. In the previous session, I told you what is the meaning of estimation and what is the meaning of actual amount spent. In the process of dissolution, you might need to take the service of chartered accountant. You might need the help of agents. CA will help you to do the dissolution related process. Agent will help you to dispose all the assets. He'll help you to find out the customers, buyers who need to buy the asset from you. Will they do the work free of cost? No, they'll charge money. So when they charge money, the charges will be depending on the actual services what they do. How much time they're going to spend. Based on that, the charges will be decided. So today in the beginning itself, how much charges to be decided, you can't accurately calculate. So we asked them approximately for this service, what will be your charges? He would have said some 4,000 to 6,000 rupees. So we asked what could be the maximum amount. He said maximum will be 6,000, or he said maximum is 5,400. We always take the maximum amount. And this amount, why we take maximum? Because this much amount will keep separately from the cash balance or from the realized value. This much money we have to keep it separately. Don't take the lower value, because if you take up the lower value and by chance the bill is for 5,400 at the end of dissolution process, from where you bring that extra 1,400? So we be very more pessimistic here, and maximum amount, highest amount, we kept it aside for the purpose of dissolution expenses. Okay, not okay. 4,000 actual spent money. When did you get to know that? At the end of the process. We are now at beginning of the process. In the beginning, do I know what is going to happen at the end? No. So today, what is the amount visible to me? Only 5,400. So in the tabular column, if I segregate the money, which money I should segregate and keep it? 5,400. Okay, not okay? Okay. This amount was paid on 15 September. Again, I'm telling those who are doing online classes or those who are watching a recording, please do not watch this video unless and until you've completed the previous two recording. Because this topic has got continuation of the previous two lectures, which is maximum loss method. The format of how the working needs to be done, everything is coming from maximum loss method. So if anybody is watching this video for the very first time, please stop here, go back and watch two videos of maximum loss method and then come back to this video. This amount was paid on 15 September. Okay. Draw up the statement showing the distribution of cash which was realized as follows. Draw up the statement. Can I say that multiple columns that we have drawn? What is that? Statement only. On 5th of July, 25,200 received. On 30 August, 60,000 received. On 15 September, 80,000 received. Any further amount? No. But tell me one thing. From cash, how much money did you segregate for realization? 5,400. 5,400 segregated. In that, how much is spent? 4,000. So how much balance money in hand? 1,000. 1,400. That 1,400, is it added in your last realization? No. In the previous question, it was added. In this question, not added. So what are they supposed to do with this? Add 1,400. Okay, not okay? Okay. The partners shared profit and losses in the ratio 2:2:1. Prepare a statement showing distribution of cash amongst the partners by highest relative capital method. So here also they've used the word plus, here also they've used the word proportionate capital basis. Can we start? Please take a fresh page. Left side, right side should be empty. Draw this format, people. Draw this format. First column is particulars column. Same format that we have learned in maximum loss method. Second column is realization cash balance. Next is creditors ledger, which is external liability, external person. Then external liability, internal person. Then internal liability, internal person. Partners capital ABC and final total column. Please draw it. Please draw it. Until we start making the payment to partners, the procedure remains the same for payment to creditors and bank B's loan, which is the one which we discussed in the previous concept. There is no change in that. Format okay? Drawn? Okay. Now people, what is the first step, people? First always will be balance. Tell me, people, what is the existing cash balance? Balance 10,800. So balance of cash is 10,800. Okay. What is the balance of sundry creditors? 30,000. 30,000. I'm putting one star mark here because I have to do an adjustment. What is the balance of B's loan? 10,000. For A, B, C's capital, 76,000, 48,000, 36,000. 76,000, 48,000, 36,000. Done? Two things has to be done. One, you have to keep the cash aside for dissolution expenses. Second, I have to make payment to creditor. How much? Only 29,000. But what is the balance reflecting? 30,000. So if I do not minus this 1,000 discount, what will happen? You will end up paying full 30,000. Because that's what we do know. As and when the money comes, you keep on making the payment. So if you do not minus this 1,000 here, when you keep on making the payment, no, you'll end up making payment full 30,000 unknowingly. So whenever the question says that any amount is not paid to creditors Abdina, in beginning itself, what do? You subtract that 1,000 which I'm not going to pay. So two things I'm going to subtract in the beginning. One is reserve for dissolution expenses. I'm keeping some cash as a reserve for dissolution expenses, which I can't touch it for any other purpose. This 5,400 I'll use only for dissolution expenses. So if I set that aside, now what is the cash available for making the payment to people? Remaining 5,400. Balance 5,400. Then less discount received from creditors. How much? 1,000. So what is the balance to be paid? What is the balance after reserve? 5,400 is the existing cash balance after adjustment. 29,000 is the balance after adjustment for creditors. B's loan, A's capital, B's capital will continue as it is, no change. So far, any doubts, online people?
No, sir.
So far, any doubts?
No, sir. No, sir.
Now, balance cash is there. Now, what will you do with that? Make the payment. Now that you know this 5,400 which is remaining, I have to make the payment to creditors. So make the payment. So less payment for creditors. Sir, in exam, without this line, can I do after this directly this less payment to creditors? Yes, you can do. And that is what you have to do in exam. Don't keep on doing balance for everything. You need to understand where to save time. Here I did because I wanted to put one concept in your head. So here I'm doing some steps in luxury manner. In exam, you will not have luxury time. So in exam, what will you do? This step you will cut. So directly what will you do? Less, less, less. Online people, got it, not got it?
Yes, sir. Yes.
So less payment to creditor, 5,400. So cash balance has become 0. Out of 29,000, if 5,400 is paid, what is the balance for creditor? 23,600. So cash balance 0. Creditor's balance 23,600. B's loan, we haven't touched it. So same thing as it is. A's capital, B's capital, C's capital as it is. No change. Can I say same step we followed in maximum loss also? So whenever we talk about payment of external liabilities, for both the methods, the steps remains common. Where the difference is coming? When we are making the payment to the partners. Now here people, we don't have any sufficient money. So I have to wait for realization. On 5th of July, money realized how much? 25,200. 25,200. First realization, money came in 25,200. Rest all dash, 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 dash. Out of this 25,200, you're supposed to make payment how much? 23,600 to creditors. What is the balance left? 1,600 to be paid. To whom will you make the payment now? To B's loan. So here, less payment to creditor 23,600 and for B's loan 1,600. So like that, total amount emptied is 25,200. Full payment done 25,200. So much for creditor, so much for B's loan. Now what is the balance, people? Balance is 0 cash balance. Creditor balance becomes 0. But B's loan still we have 8,400. Capital as it is intact. Next what, people? 30 August, 60,000 realized. 60,000 realized. So second realization, 60,000 rupees. Second realization, 60,000 rupees. Nothing in the other columns. Nothing in the other columns. How much money you have to pay to external liability holders? 8,400. Just make that payment alone. Just make that payment alone. Less payment for ACE loan. Just I'm making payment to external liability holders 8,400, and now compute the balance. In exam, no need to do the balance. You can minus the payment for the partner directly. But here I have a concept to explain, so I'm telling minus it and calculate the balance now. Balance before partner's payment. What is the cash balance before the partner's payment? So from 60,000, I made the payment to external liability holders. How much? 8,400. So balance available before payment to partners is 51,600. So this much cash is there in my hand still. Whereas my Creta's balance and B's loan balance both have become zero. A's capital continue as it is. Total how much? 1,60,000. Total how much? 1,60,000. Now the question is, this 51,600, to whom should I make the payment first? To whom should I make the payment first? So for that, we'll take the help of working note. Working note. So leave one entire page. I need this much space now. You can plan and leave the space. Go to working note. This is your working note. Anything understandable? Too much my read? No, I'll wait. I want to see that expression. I want to see that expression. Painful expression. In that pain, were happiness for me. Then further, I'll give a medicine. No, you'll smile. Looking at that smile, I'll feel very happy. Getting ready for war. Can I start? Nothing you'll understand. Leave it. Your expression, I saw now. Listen. Now don't. Keep your pens down. Full concentration. Full 100% concentration. 99.99% concentration also is dangerous for this. I want full 100% concentration. Listen now. Particulars column. I'll give time. We'll do this. We'll understand this. With you again, I'll do the entire working note. So don't note down anything. Online people, don't write anything. Entire tabular column, one more time I will do with you on the whiteboard. I just want to make you understand this part. So when I do in the whiteboard again, second time understanding. So 2 times we'll do back-to-back revision. Outstanding capital balance. First step. How much for A? 76,000, 48,000, 36,000. Any problem? Can you please take your calculator and tell me what is the existing capital ratio? Capital ratio. Simplify this. In basic, I'm telling simplify this until the lowest capital becomes 1. Until the lowest capital becomes 1. That is 76,000 divided by 36,000. 48,000 divided by 36,000. 36,000 by 36,000. What is existing capital ratio? If you have any different way of calculating, you do it. It's okay. You would have got 2.1 is to 1.33 is to 1. This is your existing capital ratio. Any problem? Existing capital ratio. Can you please tell me what is the profit sharing ratio? 2 is to 2 is to 1. My simple question is the profit sharing ratio and capital ratio equal to each other? It is not equal. Capital ratio is not equal to profit sharing ratio. Whenever we are doing this question, the underlying assumption is that profit sharing ratio and capital ratio should be same. Adavade, when you're starting the business, no, if the profit sharing ratio is agreed 2 is to 2 is to 1, we believe that partners will bring in capital also in same ratio. They don't want to have a differential treatment for capital. That is the assumption with which we will solve the question. For example, let's say the 3 partners ABC. All the 3 agreed to share the profit share ratio 2 is to 2 is to 1. Why A is getting 2 share of profit? Because he is doing more hard work. B is doing more hard work. C is doing less hard work, so he is getting 1 share of profit. Adavade, if 5 rupees share of profit, if 5 rupees the share of profit, A will get 2 rupee, B should get 2 rupee, C will get 1 rupee. This profit sharing ratio is called as hard working ratio. Okay, not okay. Also, in most of the cases, not in all the cases, in most of the cases, partners prefer to keep the capital also in the profit sharing ratio. So how much should be the capital? If 5 lakh is the capital, who should bring how much money? 2 lakh A, 2 lakh B, and 1 lakh C. In most of the cases, this will be the scenario. When you are solving this question, you should assume that between them, this is agreed. Between them, this is agreed, is what you have to believe. Okay, not okay. Okay, not okay. So now tell me, people, what is the profit sharing ratio? 2:1. What is the capital ratio? 2:1. Both are same or not same? Both are same. But in due course of the business, this will become different. This will become different. Why, sir, it will become different? Very simple. For example, let's say the profit earned was 5 lakh. Profit earned was 5 lakh. 5 lakh profit in what ratio will you distribute? 2:1. So now profit is how much? 2 lakh, 2 lakh, 1 lakh. Total how much now? 4 lakh, 4 lakh, 2 lakh. Correct? Now, when partners withdraw the money, if they're withdrawing the money also in same proportion, then closing capital also will come in same proportion. So, for example, if I'm withdrawing money, full 2 lakh, 2 lakh, 1 lakh apdina, what is the closing balance? Balance 2 lakh, balance 2 lakh, balance 1 lakh. So, if capital coming in same proportion, profit getting distributed in same proportion, money withdrawn in same proportion, means closing capital also in same proportion. Yes or no? But will this happen all the time? No. Imagine a scenario where the money withdrawn is in different way. A is withdrawn. Okay, let's say A and B is withdrawn. 1 lakh, 1 lakh each. Drawings. 1 lakh A is withdrawn. 1 lakh B is withdrawn. C has not withdrawn anything. Why? Because these two people withdrew money, The balance money is there in the business. But business says that if C also withdraws the money, we will not have sufficient money to pay to the employee for salaries. We will not have sufficient money to pay to the creditors. And if you don't make the payment to creditors on time, he will not supply the goods on time. If he doesn't supply the goods on time, my business will come to halt. So somebody has to sacrifice for now. A and B said that we are living in rented house. We have so many expenditures to take care of. We don't have any alternative income. C has got alternative income. A, B said, we don't have alternative income. Please allow us to take money. So C said, no problem, you take money. So now A and B has taken the money. Now tell me the balance, people. Out of 4 lakh, 1 lakh taken. How much it is? 3 lakh. B, how much? 3 lakh. How much here? 2 lakh. Imagine after this dissolution is happening. An amount which is there is suppose 8 lakh. Sorry, 8,000. Amount which is there, let's suppose 80,000 is there. 80,000 is there. Tell me, people, this 80,000, to whom will you pay? A or B or C or all the three? If you're paying all the three, in what ratio will you pay? Will you pay in 2:1 profit sharing ratio? Or will you pay in this ratio? I'll give multiple options. Will you take the payment only to A, only to B, only to C, or A, B, C, all? In that also multiple option. If at all you're giving this money to A, B, C, all of them put together, in what ratio? Sir, profit sharing ratio, sir. Or existing capital ratio. Means what in this ratio? Or what option is there? Equally, sir. Equally, sir. 6 options I'm giving. Choose the best answer. If you give the entire amount to A, B and C, வீட்டில் போய் அருவா கம்பி கத்தி எல்லாம் எடுத்துருந்துடும். எல்லாத்தையும் எடுத்துருந்துடும். Same thing if you make the payment to B and C, A, C will bring gun, bomb, everything will bring. Same thing. So giving any one person is not justified. Unless and until you prove that if I give to A, why I'm giving to A, appadina, if you have able to prove it, the other two partners cannot do anything. Without telling anything, I will take and go because I am Raja. அப்படின்னு நினைச்சா என்ன பண்ணுவான்? அவ்வளவுதான். புரிஞ்சுதா? Now distributing in profit sharing ratio, is it correct? Why should I distribute in profit sharing ratio? C will say, if I distribute in profit sharing ratio, A will get something, B will get something, C will get something. A will get more, B will get more, C will get less. He will tell donkey fellow, last time you wanted money urgently, I allowed you. So this money I have not withdrawn. So Naima, the entire money I should take. Who is telling? C is telling. Justifiable, no? C is telling that last time you took extra money. I didn't tell anything, no? Let me take this money this time. C is requesting A and B, but A and B are not agreeing. Why? Because now they are on dissolution process. Why dissolution is happening? Because they already fought with each other. They don't know whether the next money will come or not. Will the asset realized next time or not? We don't know. As of now, we know that 60,000 is there. Remaining 80 will come or not come, we don't know. So naturally in this scenario, what does the mind say? I want money, I want money, I want money. So AB said, no, 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 I want money. C says, no, I should get money. So you are the chart accountant who has to come in between and resolve their fight. You have to resolve their fight in a logical way. In a way where even if you're making the payment to C, you need to logically convince A and B that why are you making that payment to C alone. For that, we're taking what method? Highest relative capital method. So how are we going to crack it? We'll understand. Before that, did you understand the problem here? I can't give in the profit sharing ratio, nor I can give an existing capital ratio. Why? Because A, B has already enjoyed the money, which C never enjoyed. So if I distribute the available money to all the three partners, I'll do injustice to C. So giving in PSR, giving in existing CR ratio or equal ratio, not allowed, not allowed. So what is the option available? The last option available is highest relative capital method. You'll follow this method. And what am I doing here? Understand. So are you clear with the first point? What is the point number A? Step A. What is step 1? Outstanding capital balance I have noted down. At this stage, you have to check what is the existing capital ratio. If it is equal to profit sharing ratio, then the available money you distribute in profit sharing ratio, nobody can say anything. Money brought in capital ratio, money withdrawn in capital ratio, money brought in profit sharing ratio, money withdrawn in profit sharing ratio, available balance profit sharing ratio. Nobody is withdrawn excess, nobody is withdrawn shortfall. Correct? வந்தது ஒரு ரேஷியோல அதே ரேஷியோ தான் போச்சு. அப்போ balance available in same ratio. So now whatever realization money comes, split in the profit sharing ratio. No fight will happen. Now why is the fight happening? A and B has withdrawn more money. C has not withdrawn the money. புரிஞ்சுதா? I took as per the whiteboard example. Here we have to see what it is. Here we have to see what it is. Now here the capital ratio is 2.1 is to 1.33 is to 1. Appo na, in our example, in this example now, who do you think has withdrawn the most? Out of A, B, C, who has withdrawn the most? Who has withdrawn the money most? The person who has withdrawn the money most, his capital will be less. So C here has withdrawn more money. Next, who has withdrawn more money? B has withdrawn more money, which means C withdrew how much ever possible in the beginning. He said that C said to other partners A and B, I have a lot of commitment, financial commitment. Please help me to withdraw money. So A, B felt power and they asked C to withdraw how much he wants. That time they didn't think about dissolution. They were emotionally connected to all the three partners. So if one partner is in trouble, as other partner, I'll help him. No. So I said, no problem. I have a lot of sources of money. So don't be bothered. I will not touch the business paisa. You take and go. So C took the money. Next, who came asking for extra money? B. So C withdrew extra money. Then B withdrew. Who has not withdrawn the money? A. If at all he's withdrawn the money, he's withdrawn very less money in comparison to B and C. So A's withdrawal very less. B more. C very more. Got it, not got it? Calling people. Got it, not got it?
Yes, sir.
Got it.
Now,
Yes.
what is the
Yes,
profit
sir.
sharing ratio? 2 is to 2 is to 1. So capital ratio is 2.1 is to 1.33 is to 1. What is profit sharing ratio? 2 is to 1. Amount came in. What ratio? Profit sharing ratio. C, amount brought in, profit sharing ratio. How much he brought in? 1 rupee he brought in. 1 rupee he withdrew. So what is the balance? 1 rupee. I mean proportion. Don't look at the amount 1 rupee. In the ratio of 2 is to 2 is to 1. For example, brought on balance 2 lakh, 2 lakh, 1 lakh. I am now having a profit of 2 lakh, 2 lakh, 1 lakh. Correct? Total how much? 5 lakh, 5 lakh, sorry, 4 lakh, 4 lakh, 2 lakh. When the withdrawal is done, C has done the withdrawal in the same proportion. In what ratio is withdrawn? In the ratio 2 is to 2 is to 1. So 1 by how much is withdrawn? 1 by 5 is withdrawn. Tell me people, 2 lakh into 1 by 5 is how much? 20,000 rupees is withdrawn. Any problem? Drawing. Imagine the other people also drew the money in the same ratio. Imagine withdrawing in the same ratio. So 4 lakh into 2 by 5. How much it is? 40,000. Okay. Now what is the balance? 80 will come? Okay. 80, 80, 40. Now clear? 80, 80, 40. Any problem? So money came in ratio 2 is to 2 is to 1. Profit earned in ratio 2 is to 2 is to 1. Amount withdrawn, drawings in the ratio 2 is to 2 is to 1. So do you think that balance will also be 2 is to 2 is to 1? Yes. How much is the balance? 3,20,000? 3,20,000? 1,60,000. Is it in the same ratio? Everything, money coming in, profit, distribution, balance, everything in same ratio means no problem. So what a profit, what a realization, you split in same ratio, nobody will ask anything. But the problem here is that A ka ratio is not 2 is to 2 is to 1. It is 2.1, 1.33 and 1. Upon A and B has done less withdrawal in comparison to C. Less withdrawal. Upon whatever money came in, who should withdraw money first? We have to give chance to A and B. We have to give chance to A and B. இப்போ எப்படி கண்டுபிடிக்கணும் அதுக்குன்னு சொல்லிட்டு one step has been proposed. So far clear, what is the problem? If you don't understand the challenge, what is the concern, I can't explain further. The concern is if the money is coming in the same ratio, profit distributed in same ratio, withdrawal in same ratio, closing balance also same ratio, if everything is happening in same ratio, then the amount which you realize now, 60,000 or whatever amount is there, I can split in same ratio. Nobody can ask any question. That is the fair way of distributing. But the problem here, what happened? C withdrew according to his profit sharing ratio. Whereas B and C has not withdrawn money in the profit sharing ratio. They have withdrawn less. They have withdrawn less. So who should be given the first opportunity to withdraw money? A and B should be given the opportunity to withdraw money first. But how do we know that? A and B should be given the opportunity. And if at all A and B are withdrawing, who should withdraw first? In that, how much A should withdraw, how much B should withdraw, that we have to agree, no? For that, we are going to the next step. So are you able to understand the problem here? Why the problem? What is the question mark here? Is the problem understood? If problem is understood, then the solution I can explain neatly. Problem is clear or not clear? Clear, online people? Problem is clear or not clear?
Yes, sir.
Yes, sir.
The problem is the existing capital ratio is not equal to PSR. Means somebody's drawn more money, somebody's withdrawn less money. So now I have to make that equal. I have to make that equal. So for that, second step is note down the profit sharing ratio, which is 2 is to 2 is to 1. Third step is I want to calculate capital per unit of profit. Per unit of profit. Means what? Step 1 divided by step 2. Step 1 by step 2. 76,000 divided by 2. How much I'm getting? 38,000. 48,000 by 2, how much? 24,000. 36,000. Shh, concentrate here, don't talk. 36,000 by 1 is how much? 36,000. Now, can somebody tell me what is the meaning of step 3? Why are we doing step 3? Why are we doing step 3? We are trying to understand what is the capital balance in proportion to their profit share per unit. Per unit. Can somebody understand this and give me an explanation? Max people only know. Something you should have got here. What have we got? Why are we doing this step? Capital per unit of profit. What is the profit sharing ratio? 2 is to 2 is to 1, which is how much? 5. If 5 rupees earned, 2 will be given to A, 2 will be given to B, and 1 will be given to C. Yes or no? Yes or no? Now the problem is, the 76,000 we are talking about, this 76,000 is out of 2. 48,000 is in relation to 2, and 36,000 is in relation to 1. I'm not able to compare. I'm not able to compare. So I'm making the what do you call it? Capital comparable. 76,000, for example, here the capital ratio is 2 is to 2 is to 1. If 5 lakh rupees capital have to bring means, who has to bring how much money? 5 lakh into 2 by 5. 5 lakh into 2 by 5. 5 lakh into 1 by 5. How much it is? 2 lakh, 2 lakh, 1 lakh. So if I'm getting 2 share of profit, I have to bring double capital. If I'm getting 1 share of profit, 1 lakh is capital. 2 share of profit, 2 lakh. 3 share of profit, 3 lakh. So as the amount, proportion of the profit increases, your capital also increases in same proportion. Yes or no? Capital also increases in same proportion. For example, if the ratio is 3 is to 2 is to 1, and the capital is, let's suppose, 6 lakh rupees. Convenience I'm telling. So who will bring how much? A will bring 3 lakh, B will bring 2 lakh, C will bring 1 lakh. So if one partner is getting 1 share of profit, out of 6 rupees, 1 share is getting, means he has to bring capital also proportionately for 1 lakh. If his proportionate split is 2 rupee, there is 2 points. Then 2 lakh capital. 3 point mean 3 lakh capital. Means if the proportion of profit increases, then the capital contribution also should increase. Yes or no? Now, the purpose of dividing these two is to understand for 1 unit, how much is spent. For example, 3 lakh, 2 lakh, 1 lakh. Profit sharing ratio is 3 is to 2 is to 1. If I divide 3 by 3, how much it is? 1 lakh. 2 by 2 is how much? 1 lakh. 1 by 1 is how much? 1 lakh. So what is this contribution? 1 lakh for 1 unit. And one rupee profit kadikidhu appadina. What is my capital contribution? 1 lakh. A is wanting how much profit? He wants 3 times of it. Purida. He wants 3 share of it. So into 3 panna evlo varum? 3 lakh rupees will come. Any problem? Are you able to understand what am I doing? When I divide 3 lakh by 3, I'm getting profit per share of profit. 1 rupee profit வந்து எவ்வளவு வருது? இப்போ 6 rupees இருக்கா? இல்ல 1 rupee நான் வாங்கணும் அப்படின்னா what is my proportionate share? So 3 lakh by 3 if I do, 1 lakh is the proportionate profit for all the partners, proportionate capital for all partners. Now this is the base capital, this is the minimum capital, which means if whether A wants to come, B wants to come, C wants to come, if you take 1 rupee of profit, 1 unit of profit, 3 is to 2 is to 1 இருக்கு இல்லையா? We call them 6 unit of profit. How much unit? 6 unit. If you want 1 unit of profit, how much should you bring? 1 lakh. If you want 2 unit of profit, 2 lakhs. How do I get 2 lakh? 1 lakh into 1 unit of profit. How much it is? Sorry. 1 lakh into 2 unit of profit. How much it is? 2 lakh. A said, I want 3 unit of profit. So how much he has to bring in money? 1 lakh is for 1 unit. For 3 unit, how much? 3 lakh. Purida. Got it now? So I'm trying to calculate this step now. So when I did total capital divided by profit sharing ratio, I'm getting what is capital per unit. Capital per unit. Got it? Not got it? Online people. Got it? Not got it?
Yes, sir.
Yes, sir.
Any difficulty so far?
Sir.
Any difficulty so far? No difficulty.
No, sir.
No difficulty. Out of these 3, which is the least capital? 24,000 is least capital. Out of these 3, 3 to 1, which is the least capital? 3 to 1, which is least capital. 1 is the least capital. So when you did the capital divided by profit sharing ratio, you got 1 lakh. And always this will be equal to least capital. Always it will be equal to least capital. So now take 24,000 as base. Once you calculate the capital per unit, identify out of these 3 partners whose capital is least. Whose capital is least? Means he got 1 unit. He got 1 unit. Like that you have to assume. Target capital. Now we have to set the target capital, keeping B's capital as a base. Keeping B's capital as a base, we have to derive the target capital of A, B, and C. So how do I do it? This 24,000 multiplied by profit sharing ratio. I'll get 48,000. Least capital into profit sharing ratio. Least capital into profit sharing ratio. So 24,000 into 2. What should be the actual capital of A? 48,000. 24,000 into 2. Other 24,000 is for 1 unit. For 2 unit, how much should be the capital of A? 48,000. Purida. A's capital now should have been only 48,000. But how much is his capital? 76,000. Difference is how much? 28,000. This much is the excess capital. Means what? He has not withdrawn the money. This much he has not withdrawn the money. I'm just trying to identify how much A is withdrawn less. We are saying no, C withdrew highest. Then B withdrew. Then B withdrew. Then A withdrew. How much A did not withdraw? I want to know. No? For that, this method is adopted. Okay, not okay. So one more time I explain. Listen. In highest relative capital method, the problem is partners bring in the money in the ratio 2:2:1. Profit also distributed in the ratio 2:2:1. But when the withdrawal happens, no, people withdraw what they feel like. So when this is withdrawn in haphazard manner, the closing balance will not be in the profit sharing ratio. So in our example, who is withdrawn highest? C is withdrawn highest. Next, who is withdrawn highest? B. Apana, yaar paisa withdraw panla. A is not withdrawn the money. Now the question is, if the realization money 60,000 is coming, if I distribute to all the 3 partners, it will be unfair to? Why is 60,000 full now? It will be unfair to whom? A, because earlier, when the business was happening, B and C withdrew money. A did not withdraw the money. He never enjoyed the money. He never tasted money. So now who should get the opportunity to taste the money first? A. So for that, This is the main problem. This is the main problem. So now I don't know how much less did A withdraw or how much more beyond C withdraw. We don't know that clarity. यार जास्ती withdraw पढ़ना, यार कमी withdraw पढ़ना தெரியாது. That is what we are trying to calculate. So how are we trying to calculate? First step is write down the existing outstanding balance coming from the balance sheet. Divide that by profit sharing ratio. If you do so, what will you get? You'll get capital per unit of profit. So for 1 unit of profit, what is the capital of A, B, and C supposed to be? That tell me, A has taken how much unit of profit? In this business, A ka how much is your profit sharing? 2. So B ka how much? 20. Sorry, B also 2, and C also C is 1. Now keep the B's capital as a base. Why B's capital? Out of the 3 partners, who's having the least capital? B is having the least capital, which means he is withdrawn more. So take him as a base. He is the target person. He has withdrawn highest. So we'll take his capital as a base. So now 24,000 is profit capital per unit. Capital per unit. If A is taken 2 unit, if I multiply, how much should I get? 48,000. So as of now, when I prepare the ledger, A's capital balance should have been how much? 48,000. But how much it is? 76,000. Why is capital more? Because A has not withdrawn the money. That's why his capital is more. How much is capital is more by? 28,000. So excess capital is how much? 28,000. He has not withdrawn this much money. Excess capital is 28,000. Got it? Not got it? 24,000 is capital per unit. B is taken how many unit? 2 unit. 24 into 2 is how much? 48. Profit per unit is how much? 24,000. How much profit is C taken? How much unit C is taken? 1. So 24 into 1, how much? 24,000. His capital should be 24,000. His capital should be 24,000. But how much it is there? 36,000. His capital should be 24,000. But it is 36,000. So who has withdrawn? C has withdrawn more or less? C has withdrawn less. In this process, who has withdrawn more money? B. So what you saw here is a different story, and what you saw here is a real story. So in this process, who has withdrawn more money? B has withdrawn more money. B has withdrawn more money. Already B has withdrawn more money. Is it fair if I distribute available money? How much is available? 51,600. If I give to A, B, C all the 3, is it fair? B already is having more money with him. Again, if I give B, it will be unfair to A and C. So here we got to know that excess capital of A is 28,000. Means 28,000 A is not withdrawn. And C is not withdrawn 12,000 rupees. Okay, not okay. Okay, not okay. Now here also, you have to do one checkpoint. Check what is the capital ratio. Check the capital ratio. 28,000 by 12 is to 12,000 by 12. 2.3 is to 1. In comparison to A, C has withdrawn more money. In comparison to A, C has withdrawn more money. How much should be A's capital? 2 is to 1. How much it is? 2.3. So A's capital is 0.3 more compared to compared to C. C's capital should be how much? 1. Target capital 1. His real capital also is 1. But C is withdrawn properly. A's target capital should be how much? 2. Target capital should be always in the ratio of profit sharing ratio. And எவ்வளவு இருக்கு? 2.3. Extra இருக்கு. அப்ப withdraw பண்ணல. Withdraw பண்ணலனால தான் extra இருக்கு. So out of A and C, who should be given the first opportunity to withdraw money? A. So first realization la யாருக்கு first கொடுக்கணும்? A க்கு கொடுக்கணும். Then C. Once you give to A and then C, now at the end, the amount of capital will be in the profit sharing ratio. Then you can distribute in the profit sharing ratio. No problem will happen. Okay, not okay. So again, you have to check point here whether the capital ratio and profit sharing ratio is matching, not matching. So capital ratio of A and C is not equal to profit sharing ratio. Hence, repeat the process until the capital ratio becomes equal to profit sharing ratio. To keep on repeating the same process. Same process means what? Now listen. Up to this, we did one process, no? Up to this one process. Same process will be continued. Same process has to be continued. Next is PSR. Now, distribute the excess capital in the profit sharing ratio. Divide the excess capital in the profit sharing ratio. So 28,000 by 2. Profit sharing ratio of A and C alone. 28 by 2. 12 by 1. So I will get excess capital per unit of profit. I'll get excess capital per unit of profit. This is not capital, this is excess capital. Any problem? Excess capital per unit of profit. 14,000, 12,000. Means for 1 unit for 1 unit of profit, how much should have been the capital? 12,000. For 2 unit, 24,000 should be there. Other, I want to keep not B's capital, C's capital as a base. C's capital as a base. Lease capital how much? 12,000. 12,000 rupees is capital per unit. How much unit is C enjoying? 1. So 12,000 into 1 is how much? 12,000. How much unit A is enjoying? 2. So 12,000 into 2 is how much? 24,000. So actually, A's capital should be how much? 24,000. But how much is capital? 28,000. 4,000 extra. Apana, A is not withdrawn, 4,000 rupees. If capital is extra means what? Withdrawal not happened. So how much did he not withdraw? How much he has not withdrawn? 4,000 rupees is not withdrawn. Okay, not okay. So now this 4,000 rupees is called as excess on excess capital. Excess on excess capital. Any problem? Any problem? So A's excess capital. A's excess capital is how much? 28,000. Excess capital. In that excess of excess capital is how much? 4,000. So what is the balance excess capital? 24,000 is balance excess capital. What is C's excess capital? C is 12,000. Do we have any excess of excess capital for C? No. So what is excess capital? 12,000. So first you have to make payment of 4,000. Second, you have to make the payment of 24,000 and 12,000. In what ratio? In the same ratio. 2:1. Now check, no? 24,000 is to 12 is how much? 2:1. In same ratio, the money will be paid. So what is the order of payment? 76,000, 48,000, 36,000 is existing outstanding capital in the ledger. Yes or no? In the ledger, if you see in question, this is the outstanding balance. Now, what is the available money? 51,600. 51,600. In that, first 4,000 will go to whom? Excess of excess capital will go to whom? A. So 76,000 is the total capital of A. In that 4,000, which is excess of excess capital, I have to pay to whom first? A. So what is the balance capital for A? 72,000. B, we have not paid anything. C, we have not paid anything. After settling excess of excess capital, next you have to settle excess capital. Excess capital is 28,000. In that 4,000, excess of excess capital already settled. So what is the balance capital? 24,000. So settle 24,000 to A. Settle 12,000 to B. Sir, total money required here is how much? 36,000. Imagine only 30,000 is there, sir. Then what to do? No problem. What is the proportionate here? 2:1. In the same proportion 2:1, you split 30,000 rupees. Nobody will come and fight. Nobody will come and fight. Because this 24,000 now is in the profit sharing ratio. That excess money is already removed. Actually, Munadi gave 28,000. And here, 12,000. So how much was excess of excess capital? 4,000. That we have paid. So now the balance 24,000 and 12,000 is pakka in the profit sharing ratio. It is in profit sharing ratio. So whether the amount is 36,000, whether it is 30,000, whether it is more also, doesn't matter. If it is more, pay maximum 24 and 12. Imagine we have 60,000. Pay how much? 24 and 12. If it is exactly 36,000, pay 24 and 12. If it is less than that, split this 30,000 in the same profit sharing ratio. As and when the money comes, split in the profit sharing ratio. Nobody can fight with anybody. Because in what ratio is the profit? In the same ratio is being paid. Okay, not okay. Online people. Okay, not okay. So balance is how much now? If you pay 24,000 and 12,000 to A and C, what is the balance of A now? 48,000. What is balance of B? 48,000. What is balance of C? 24,000. Now all this in the ratio 2:1. So now after removing excess of excess capital, now the capital of the partners are equal to profit sharing ratio. Now whatever money comes, how much ever it comes, split in the profit sharing ratio. Nobody can argue. Ana, without removing excess of excess capital and without removing excess capital, had you given in the profit sharing ratio, first A would have fought. Next C would have fought. With whom? B. With whom? B. Purjira. Got it, not got it. Clear at this point. Now can we do this working note on our own first? Where are you now? Basically, we are starting at this stage. You have done the payment of A's loan, 8,400. Now balance cash is 51,600. Now the question is, in this 51,600, to whom should I make the payment first? To whom should I make the payment first? Now we are deciding. So 4,000 payment will go to A. Then 24,000 to A, 12,000 to C. Then whatever money comes, it will go in the profit sharing ratio. Okay, to conclude at this, we have to do the working note. So let's do the working note. First column, what column people? People, online people, are you all there? Alive, kicking? Alive and kicking?
Yes, sir.
நான் சொன்னல கண்ணுல தண்ணி
Yes,
இல்ல
sir. Yes, sir.
அந்த மாதிரி டாபிக் இது பட் இட்ஸ் நாட் தட் டிஃபிகல்ட் இட்ஸ் மேத்தமெட்டிக்ஸ் இட்ஸ் காமன் சென்ஸ் it's not difficult if you know the process if you understand the problem what problem ka solution you're going to give no then there's not a big deal first time anything when you learn will be tough remember 11th standard first time they taught you what is debit and credit you taught what debit credit paisa mana science ke poidalan pathinga now how it is debit credit is better or science is better debit credit is much better same way you practice this 10 times you'll get it so Anjana, Lakshana, Darshini, Ganashri, Hemasurya, Kamlesh, Lokesh, Mushina, Niyasha, Raghavi, Reshmi, Ritika, Sarvesh, Shrinanda, Shushmita. They are not there.
Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir.
Super. Can you do
Yes,
the
sir.
working note now? First
Yes,
column,
sir.
particulars column. Second is A, then B, then C. Any total column will come? Any total column will come? No column. Okay. Why are we doing this working note? Why are we doing this working note? To decide the order of payment. Why you have to decide the order of payment? To give the amount to all the partners in the profit sharing ratio, no? Give it, no. Why? So we can't give it profit sharing ratio. Why? Because the capital which is available now, it's not in profit sharing ratio, which means some partners withdrawn more, some is withdrawn less. So the partner who's withdrawn already more, to him we should not pay. So we should identify that partner who has not withdrawn the money. Identify him and give the payment first. In our example, who did not withdraw money? A did not withdraw money. How much? 28,000 in total. That is excess capital. Excess how much? 4,000. So first give 4,000 to A. Then two remaining partner A and C give in the same proportion, which is 2:1. So I have to identify to whom should I make the payment first, how much amount, in what order. To decide that order only, this has been done. Okay, not okay. So what is my step 1? Outstanding balance. Write down the outstanding balance of capital account. How much it is? 76,000. Then for B, 48,000. For C, 36,000. Very good. Here, this is not understandable. This is 76,000 capital in 2 ratio. This is in 2 ratio. This is in 1 ratio. It is very confusing. It's very confusing. Correct? This round amount. Sila per capital எப்படி இருக்கு தெரியுமா? 72,143, 48,354, 36,123. So who has got more capital? Who has withdrawn more money? Who has withdrawn less money? Can you identify? Not possible. To make the calculation easy, what we do? We calculate per unit. We calculate per unit of profit. We want to know what is existing capital per unit of profit. So divide by profit sharing ratio. This is called as unit of profit. This is called as unit of profit. So how much is the profit sharing ratio between A, B, C? 2:2:1. Third step, existing capital per unit of profit. I want to know existing capital, Gautam, per unit of profit. Now this is in 2, this is in 2, this is in 1. In some case it will be 5, some will be 2, some will be 1. It's very difficult to do a comparison. So to have a comparison, to have a parity, what we do is we divide by the respective units. So we'll get for 1 unit. For 1 unit, how much we'll get it? So what is existing capital per unit? 76 by 2, how much? Sorry? 38,000. Then 24,000. 36,000. Now what is step 3? Sorry, step 4. You will keep least capital as a base and you will set a target capital. Now you have to set a target capital. Means what? What actually the capital should have been. What the capital should have actually been. Target capital. How will I do it? You will take the least capital as a base. 24,000 multiplied by respective profit sharing ratio. Respective profit sharing ratio. So 24,000 is the least capital of B. If I multiply with A's unit, A's enjoying how much profit? How much unit of profit? 2 unit of profit. So he should bring double capital. His capital should be double of B. His capital should be double of B. So 24 into 2 is how much? 48,000. 24,000 into what is the profit unit of B? 2. So 24 into 2 is how much? 48,000. And 24 into 1 is how much? 24,000. So this is 24,000 into 2. This is 24,000 into 2. And this is 24,000 into 1. This is my target capital. If the partners had withdrawn in the profit sharing ratio, my closing capital would have been this. அதாவது partners edaka muduka, had they not withdrawn the money. You understand what is edaka muduka? Had they not withdrawn the money in haphazard manner, had they withdrawn the money also in profit sharing ratio, capital vandhathu profit sharing ratio, profit distributed also in profit sharing ratio, money withdrawn also in profit sharing ratio, then the closing capital also would have been in profit sharing ratio. Why the closing capital is not equal to profit sharing ratio? Because the profits were withdrawn on haphazard manner. Some withdrew more, some withdrew less. So we didn't know who withdrew more, who withdrew less. So we are trying to find out, had the withdrawal happened in the profit sharing ratio, after withdrawal, what would have been your remaining capital in the capital ledger? This would have been the remaining capital in the capital ledger. If everything would have happened as per profit sharing ratio, the closing balance should have been 48,000, 48,000 and 24,000. Money came in the profit sharing ratio, profit added in the profit sharing ratio, money withdrawn in profit sharing ratio, closing balance also would have been in profit sharing ratio. But now the closing balance is not in profit sharing ratio because the withdrawal is not done in PSR. A's balance should have been 48,000, but how much it is now? 76,000. Is it more or less? More. If somebody's capital is more, means he's withdrawn less. So who should be given the opportunity to withdraw first? A. So tell me now, excess capital. Fifth point, excess capital, which is nothing but 1 minus 4. 1 minus 4. First step minus fourth step. 76 minus 48. So how much is excess capital? 28,000. 48 minus 48, 0. Means B's capital should be 48. It is exactly 48. So nothing we have to pay to B. C's capital is how much should have been? 24. How much it is? 36. It should have been 24, but it is 36. So how much is not withdrawn? 12,000 is not withdrawn. So next party to pay is 12,000 to C. Now imagine, instead of 28,000, had it been 24,000, will I do next step? Excess of excess capital not required. Now once any amount comes to the profit sharing ratio, this step is not required to be done. In the step, only when the profit sharing ratio and capital ratio are not same. So here also I did a checkpoint. At step 5, I'm doing a checkpoint. I'm checking whether my profit sharing ratio and capital ratio are same. Check. Check at this point. Check whether CR is equal to PSR. Please check. What is the CR? 28 by 12 is how much? 2.33 is to 1. Whereas PSR is 2:1. So still, this is not matching. Upon a same step has to be repeated one more time. What is the step? Note down the profit sharing ratio now. 6th point, note down the profit sharing ratio. Profit sharing ratio only between A and C. How much it is? 2:1. 2:1. Any problem? Online people, any problem?
No, sir.
No, sir.
Now, 7th step is what? What is 7th step? Actual excess capital per unit of profit. Actual excess capital per unit of profit. What I should do? 28,000 by 12. 28,000, sorry, by 2. How much it is? 14,000. And here it is 12,000 divided by 1, which is 12,000. Any problem? Online people, any problem?
No, sir.
Now,
No, sir.
what is the next step? 8th one. Target capital. How will you do? Least capital multiplied by the respective profit sharing ratio. So what is the least capital? 12,000. What is profit sharing unit for A? 2. So what should be his target capital? 12 into 2, 24,000. Capital per unit is 12,000 into how many unit? 1 unit. So how much it is? 12,000. Actually, in comparison to A and C, if I compare A and C, A's capital should have been 24,000 and C should have been 12,000. But A's capital is how much now? 28,000. How much is more here? 4,000 is more. 4,000 is more. So between A and C, who has withdrawn more? Between A and C, who has withdrawn more? C is withdrawn more. A is withdrawn less. So between A and C, who should be given the first chance to withdraw? A should be given the first chance to withdraw. How much? 4,000. That is called as excess of excess capital. So ninth is excess of excess capital. 5,000 and 4,000 and 0. Any problem? Online people, any problem?
No, sir.
No, sir.
No, sir.
Now, I'll make the first payment to A, 4,000. After that, I'll come back and make the payment to whom? A and C. A and C. If the amount is available is less, if amount available is less, in the same ratio, 2:1, I'll split it. So A and C can't fight. If amount is equally available, 36,000 is available, pay 24,000 to A, 12,000 to C. Amount more is available, then pay 24,000 and 12,000 only. And remaining excess amount is there, no? That has to be given to all A, B, C in profit sharing ratio. Because once you remove excess capital, A and C ka capital will come. Once you pay A and C's capital, now A, B, C, all of them will be in same order in profit sharing ratio. So once you pay excess of excess capital, and once you pay excess capital, further money should always be paid in the profit sharing ratio. Because capital ratio is not equal to PSR. Why? Because in capital ratio, we have excess capital and excess of excess capital. So excess of excess capital removed. Excess capital removed. So automatically these both will now be equal. Once you reach to that stage that both are equal, whatever money comes in thereafter in realization, everything should be paid in the same order of PSR. Okay or not okay? Online people, okay or not okay?
Okay, sir.
Okay, sir.
Now come back. 4,000 rupees people will make the payment to A first. Payment to A first, 4,000 rupees. Any problem? Payment to partner A, any problem? 4,000 paid. So what is the balance in the cash account after you made the payment to A? That is, once you made the payment of excess capital, what is the balance now? 51,600 இருக்கு. அதுல இருந்து எவ்வளவு pay பண்ணீங்க? 4,000 pay பண்ணீங்க. What is the balance now? What is it? 47,600. 47,600. 76,000 was A's balance. In that 4,000 paid. So what is balance of A now? 72,000. B and C, nothing you paid. So 156 is balance. Sir said in exam, can we combine all the payment together? Yes. Here I'm doing it one by one because I wanted to make you understand what is happening. So I'm going step by step. Now people, how much is the balance cash in hand? 47,600. So once you make the payment of excess capital, next payment should be done for excess capital. How much is excess capital both put together, A and C? 36,000 is there. But how much money is there? 47,600. First 36 pay பண்ணிடுங்க. To pay excess capital, do I have sufficient money? Yes. So pay them. Imagine, had you not had 47,600 and you just had 10,000 rupees, then what will you do? This 10,000 will be distributed between A and C. In what ratio? 2:1. Got it? Not got it? Imagine 10,000 is not there. Correctly, how much is that? 36,000. Then no problem. Pay 12,000, 24,000 and 12,000. Game over. Now what is there? More is there. So pay how much is applicable to them. The remaining amount will distribute in the profit sharing ratio between A, B and C. So 47,600 is there. In that, we are making payment to A and C. How much? 36,000. 24,000 for A, 12,000 for C. Now tell me people, after making the payment of excess capital, What is the balance after payment of excess capital? We have still 11,600. 11,600. Out of 72, 24 made payment to A. So balance is 48 for A. B, nothing paid, same 48. C, 36 was the payment. In that, 36 was the amount due, 12,000 paid. So what is the balance? 24,000. Now please check whether this capital is there in profit sharing ratio or not. So now the capital ratio is brought equal to profit sharing ratio. Now all the excess of excess capital is removed. Now there's a parity in all the three partners. So from now onwards, whatever money is received, everything should be paid in the same profit sharing ratio so that nobody will fight. Online people, got a logic?
Yes, sir.
Yes, sir.
Less payment to partner A, B, C in the profit sharing ratio. All the three will make the payment. 11,600 in the ratio 2:2:1. All the three will get this money. All the three will get the money. Do it. How much are you getting? 11,600 into 2 by 5. 4640. And 1 by 5 is 2320. First time when you see and learn, you might find it challenging, but practice this question 2 or 3 times, you'll get a hold. Don't worry. So tell me, people, what is the balance after the payment to the partner? So cash balance became 0. For A, it is 43360. Same for B. And for C, it is 21680. Any problem? Now, next is what? Sir, 80,000 realized. 80,000 realized. So third realization, 80,000. Remember, now, without forgetting, you have to add back the savings in realization. Here you have excessively deducted. How much have you deducted here? 5,400. How much have you spent only? 4,000. How much is there in your pocket? 1,400. இங்க அதிகமா deduct பண்ணிட்டீங்கல்ல இப்போ பணம் இல்ல மாதிரி இருக்கு. So that money you have to bring in inside the business. The money which is get separately you have to bring inside for the payment to the partners. So add back the savings without forgetting. So add savings and dissolution expenses 1,400. So what is the total money available? 81,400. Do you need to do that step one more time? No. That step is done to remove excess of excess capital. Once those two impurities are removed, once your capital ratio becomes equal to PSR, then same amount distributed in the PSR, game over. Less payment to partners. All the three partners in what ratio? Profit sharing ratio. Full 81,400 in the profit sharing ratio. So cash balance is 0, but we still have the capital balance in the same ratio. PSR 2:2:1. 27,000. That is the loss. There's no further realization. So this is the ultimate loss of the partners. If you want to have a hold on this topic, ensure to do a workout of this question by today itself. Before you go to bed tonight, the last thing that you'll do is work out this question. Again, tomorrow morning, do this question. I'm telling you 2 back-to-back times, tonight and tomorrow morning. And give a gap of 2 days and try one more time. After 2 days, if you're able to do it without any mistakes, which means you will never forget this concept. I never gave this suggestion for all the other topics. But I'm telling you, be very serious. Tonight, one time you work out. Tomorrow morning, one time you work out. Back-to-back 2 workouts. After 48 hours, one more workout. If you're able to understand it properly, which means you will never forget this concept, you will never fear this question. You will not believe there's so many people who leave these concepts in, what do you call it? When they study, they leave this topic in. People don't study this. Do you find this is that difficult? Since you're learning for the first time, the process might take, little bit difficult to digest. But once you understand the concept and the flow, then it's not a big deal. So my humble request is do not leave this question and come. If you have better question and exam to do, then you can leave it. Otherwise, this is 100% a doable question. So when you prepare now for next 1 month also, do not leave this question and come. Prepare in your exam also. And God knows, I may ask this question in the test also. I may twist the question and also ask. And in my paper, there's no choice. Your attempt didn't come. No choice. Half portion is what choice here, man? No choice. Huh? With this, we're done with dissolution topic. Any difficulty? Any difficulty? So all the book back, dissolution questions. If possible, go home, finish your lunch, take some rest, sit and complete the remaining question of dissolution topic. Got it, not got it? Online people, got it, not got it?
Yes, sir.
Yes, sir.
Sir.
I'm just pausing the video 1 second. Okay, so one of the student was asking, if I do this in realization account, what will happen? In the realization account, you'll record all the assets here, right? All the liabilities will come here from the balance sheet. Any problem? Make the payment to the creditors. Creditors, how much you're paying? 29,000. Got it, not got it? Now, realization expenses how much? 4,000? 4,000 rupees. So what will happen? Asset realized how much? Asset realized equal to all this 25,200 plus 60 plus 80. That will come here. Got it? This is normal procedure. I'm just trying to, this is not required for examination point of view. Since he's asked, I'm just telling you how to prepare the realization account. Normal asset transfer entry, normal liability transfer entry, liability payment entry, realization expense entry. Ultimately, okay, an asset realization entry. Ultimately, what will you get? Realization loss. Got it? Whereas partner's loan is there. No, from partner's loan, you'll make the payment directly. No problem. Now come to capital account. In capital account, what will have? You'll have the balance brought down. Record the realization loss. Make the payment in the same order. First payment 4,000 to A. Next payment 24,000 to A, 12,000 to B. Then balance payment to A, B, C. You total it. You record the amount. At the end, the closing balance you'll get will be exactly equal to this. This will be the exact amount. Once you pay the cash, this will be the exact amount. Okay, not okay. You try and see. If you still don't get it, I'll do it. No problem. Any other doubts, please? Can we wrap up? Can we wrap up? Okay. All people, can I wrap up?
Yes, sir.
Yes, sir.
Okay, guys. So that's all from my side for this session and this chapter. I'll see all of you in the next new chapter. Until then, bye-bye. See you. Take care.
Thank you, sir.
Thank you, people.
Thank you, sir.
Thank you.
Thank you, sir.
Thank you, people. Thank you.